Hello traders, this is Alex with the Commodity Matrix. We are going to have a little update today. We're going to go over the grains. This is my X account, kind of my standard intro that I normally do here. CBOT Man 33 is my handle. Um, I post stuff here to review, kind of a nice place to dump stuff. Okay, we're going to review the commodity side today. This is the corn, beans. These are the ones we'll be covering. You can kind of see the list there, and this will be where we do the charts on bar chart. I use the free part. But you can pay for it. It's a good service. I recommend it, even though I'm not sponsored by them or anything. I said I wasn't going to update it for another week or so, but I kind of changed the format a smidge. This is, we're going to do a little faster pace. Normally I did the quarter moons for time, but now we're doing the waxing and waning crescent moons, right? They're 3 days in length is all. So some days there's no data if there's a holiday. But here's the kind of the trade sheet to the margins. I also added Bitcoin and Ripple, figuring $5 grand a piece for those from where we got in. So we'll go through them here real quick, and then we'll, if we have time, we'll go through the bar chart data. Now, what I'll probably do is divide it into this first 10, which will be the ag sector, and this will be 7 of them will be crude, nat gas, S&P, gold, silver, Bitcoin, and Ripple will be the second half. Now, I will divide this video into 2, so you can watch the comprehensive, right, which will have all of them, or you can go to the grain one, or to the, I guess you call it financial one, if you want just that stuff. All right, let's move right into the corn. And you can see with the waning, waxing moons, your data is quick. And it was hard for me to do, to update all this stuff, but I think it's important, right? We're still kind of following the same principle. We're not using the 3 quarter moons. I might still every once in a while put those out because I still keep track of those, but for now it's going to be more of a swing chart based on the moon cycle. And again, of course, square root of 9 hasn't changed. So yeah, let's go through it. Here's the corn. Again, we talked about buying this dip. It was successful. We had a power up. We bought it here, I believe, on this day. Now I bought 2 cream stuff, right? The CORN, the SOYB, and the WEAT. Kind of created my own index of grains, but I bought it here, kind of picking a little bit. Now, if I was trading futures, right, which I'm not right now, I would have done options, right? Which, if I pick, I use options only. Don't have to worry about a stop as much. Because I'm a time guy, right? This is the time that you normally make a low or high in the grains, typically, right? Mid-July, July 4th to July 12th. Now, we're in that zone here, so maybe this is all we have. And that's the case, I'll get stopped out with a break even or small loss. But you can see this format, I've got them colored a little nicer. Again, because you got a lot more data. You can go back. All of them are plotted from September 21, 2025. So that's the solar, right? Again, you can still see the importance to me for the solars. These color coordinated things are, again, still half to get this yellow and quarters, right? So, or 3/4. So it basically, if you took a Gann wheel from the solar eclipse, these are your angles, right? In sense. All right, let's move on. Let's go to wheat. And you can see here we've got, I haven't completed all my trend lines up, but you can see that we're powering up here pretty good. Again, all the grains had some activity yesterday, Friday, Thursday, Wednesday, maybe even, but we did not bust the short out yet. We're still short with the stop right here on the wheat. Now it had a more aggressive thing, and we're assuming we're over halfway through harvest. Again, I waited, even though we were bullish fundamentally, I waited because I always wait till about halfway through harvest, and so I bought this low. Here's the beans. Again, from the beginning, when I started plotting this waxing and waning periods, you can see it's kind of nice little coagulation. We got long here, put stops here, pretty simple stuff. Probably I would have went under the low, but again, I'm using kind of a formula I've learned over the years not to guess, just let the formulas, maybe it's AI, maybe it's moving averages, stochastics, whatever you figure out. You usually don't trade off of them unless you have a specific rule. Here's the meal. Again, the problem with the beans is the meal. It's a dog. We were above the solar eclipse, so we made a nice event low. And like I said, the last video when we were down in here, I would buy the meal or meal calls instead of the beans, because again, if the meal don't go up, beans aren't going to go up. Now, oil's a different situation. We are powering up. We came off a super bull market, and we'll look at that more on the bar chart. But it's the stops are right here, so pretty critical area. Nice little correction, right? What's the definition of a correction? You got to break stuff. Well, we broke the uptrend line and we broke a swing, right? So we officially got short. Oh, those prices aren't right. We officially got short right there. So pretty interesting on its own merits. Hang on. Okay, I changed the oil. Again, I just got done to finish this. I didn't go through it, but so I changed that. Okay, let me go back to the bean oil. So if, yeah, we officially got short here, right? Actually, right here. Dadgummit, 72.79. 72.79. This is all unofficial, right? I'm not actually trading all these. It's more of a learning for you. So you should always take buy or sells with a grain of salt. But you can see why I sold it here, right? Um, Again, I'm also trading the spot chart. Normally, I would never do that in a million years, but it's the only way I could get the data. So we'll just, again, assume, right, that there's some a squish in these activity, and always double check what you're doing with whatever month you're working with. Anyway, so we sold it here, stops here, pretty basic. You can see we got the 1-to-1 coming up. 45 degrees over will be in here as well. Again, this one, this is the halfway between between the two solar eclipses. The 66 market day that I used, Matrix or Gann used, 90 degrees, right? Either way, it's right in there. Kind of missed the high by a bit, but pretty close. Usually things kind of fall in line, so it could be a secondary event or maybe a bone high here, really get rocking and rolling. And of course, if that's the case, I would be looking, let me just copy these, for that push. The 22 days is always the irritation, right, on the Gann wheel. This is the kind of irritation zone, and then 45 degrees would be kind of my pick, and that's right in the solar eclipse sequence. So it's definitely possible this could be a buying low. We broke it. It is a true correction. If we're going to see new all-time highs in bean oil, this will be the measuring pivot to do your homework on. Here's the cattle. Again, a lot faster pace, which I like. Cattle with the quarter moons are just too slow. You can see, though, we have a double top, which is highly unusual. But it broke it, went above the eclipse, now it's below, and it didn't only just do it, but again, I'm assuming some of this was a rollover, maybe from June to August, right? Because again, we're trading the spot. So this is a power out, power down. We sold it right here, which again is obvious, right? And our stop then is above the highs until we get a little wiggle in here that we can adjust the stop to. Here's the cough again, bull market city and then bear market city, and down we've been pretty aggressive until this last push. Problem with this is still too slow. 16 days, 37 grand or something. It went up 70 some points. That, even a 2-day, 3-day chart's too freaking fast, or excuse me, too slow. Our stops are still under the low. So, but it's no big deal, right? You understand that. I mean, if I was trading, I would probably be looking at an hourly chart or something where you get a little more logical area. Now, it makes sense that we went through these old highs by a little bit. That's what it normally does. And it could break all the way back to the solar eclipse, I guess. Now, that would be kind of more bullish than bearish, in my opinion. There's a good level of support there. We bought it here, right, on the go, and our stops over under the lows, which kind of suck ass. Here's the cotton. Again, pretty good bull, right? We started this flat market for quite a while. We finally powered up, went above both eclipses, and then we just started the journey. Again, to me, this is trading undervalued, right? It has the characteristics of an undervalued market. Again, what do you see in an undervalued market? You see little coils, little pennants on the daily chart, flag patterns, right? That's when you start seeing those patterns and they're working. That means you're more likely something fundamentally has changed and you're undervalued. Well, I like this little break. It's not aggressive, right? Again, a true correction, right? It broke something. We broke the swing, kind of broke some little pivot, at least on this chart. Again, we're trading the spot, so it's a little more tough, but the stops are down here makes sense. I like that. We're above the 1-to-1 going back up, so I wouldn't be short this market willy-nilly. You better have some reason. And again, the quarter time period was the low, so again, I like the cotton on this whole deal. Now, the tendency, if this was leg one and this is leg two, we're setting up for a fast market, right? That's pretty fast. It's not a long time, so we could make highs by the end of the year and be done, right? I mean, at these paces, you're looking at, if this is, again, I multiply things times 5. If this is your first leg, and we'll just round down to say 50 because that's easy math. 50 times 5, that's 250 boxes, right? So we're looking at potentially new all-time highs if this holds, and that's the pivot. Man, that'd be cool. Again, cotton's been a sleeper, right? So those are always tough, falling by the wayside. Everybody's focused on focusing on silver and gold and stuff like that. Here is the sugar. Again, nice correction, broke out the lows on the spot chart. I was trading March on the other one. I didn't show this, right? I like, if you ever follow me, I like bear traps like this or bull traps. So I expect this market to power up minimum, right, to take out these highs and have a trap up there. We've already proven that it can do the trap. For every action is equal but opposite reaction, right? Newton's third law. I like that. It's about the only thing I like about Newton. Otherwise, he's a wacko job. But it applies to the physics and the psyche of a trader, right? So anyway, nice momentum. It's obviously a trader's market, a sequencing trader, right? 23, uh, excuse me, that's 13, uh, that's 8, 9, 10, right? So you just kind of, you can see that these are sequential enough, right? That you can kind of watch them and wait for the trend change. Even a small one, you're going, okay, it's getting ripe. And we know this was pretty good support. This is a solar eclipse close, right? This is pretty good resistance. That's our other previous solar eclipse back in September 21, right? So that's a perfect range trade for the eclipses that I do. Here's the orange juice again, a power down, right on the zone, right halfway through. Nice little buying area. If you're now again, it's a crazy market. It just came from all-time highs, the biggest market in history. So it wasn't that easy, right? It was scarier than dog snot. More than likely, you wouldn't have been trading it or shouldn't have been trading it. And again, you can see this is too quick. Maybe the quarter moons didn't show all this. This has a little more swinging, but stops are where they are, just because that's kind of how I'm playing it. But logically, the resistance is probably the solar eclipse, right, for the traders out there. And again, we did pop lows, so we could pop highs, right? I mean, that's the range I think you got to assume until we get into some colder weather in Florida. Okay, first up is the corn. And you can see, again, this is all going to be spot continuations. It's got the huge Acoli. Big crop underway, more than likely. Be a little cautious. It should have went down. It is not. July is a low. I always buy July lows if I can. If they don't run out without me. I like to buy July 4th to July 12th if it's a low, or sell if it's a high on July 4th to July 12th. It's a simple thing, right? God, don't beat your head up. These options, pretty simple. Options are dirt cheap down in here. Here is November beans. A little more positive, right? You can see the uptrending chop. And this, big target, right? That wasn't that long ago, so we're still feeling the drunken after effects of this all-time. I don't know if it was all-time high. No, but it was a high push up against the highs. It's a big market. Now we're back to, $12, which historically still pretty freaking high, by the way. But the margins are fairly reasonable. But again, if I was bull, I would trade the. Come on, I would trade the meal. Or this is the wheat. Shit. I was gonna do the dramatic effect again. Broke out back here, back in February. Pretty typical, right? And I think I like the wheat. My index that I kind of created with the 2 cream stuff, I really lean more into the wheat, almost 2 to 1, because it's halfway through harvest, and we know we ain't going to increase, right? More than likely, it'll probably decrease, right? Short crops get shorter, the old adage goes, and long crops get longer or bigger. Here is the meal. Again, if I was a bull on the beans, I would lean into the meal. The bean oil that we'll look at, it's already on its highs. So if the meal takes off, I don't care if oil drops, it's going to really help the beans. I think that's what's keeping it down at the moment. Now, maybe it won't. Maybe it'll be a dog with fleas. You get up on the backside of this. You can draw a trend line in here. You get on the backside of it, and it makes sense in, right? Something like that. Backside of the speed line, kind of averaging out. Somewhere up there makes a little sense. That's going to be a little tough. Halfway, maybe 62% back of this range. That kind of thing, right? And then, of course, you got to come down from the highs. And you can see we hit all of them. So obvious cross right in here. We'll just round up somewhere like that. This area is going to be a tricky spot. Either one or two things are going to happen. Either we're going to fail miserably, or we're probably going to gap and go and break this whole thing up, right? Again, but hopefully it follows through, right? That's again the definition of a correction. You got to break shit. Well, if it breaks up here and then falls back, it's more than likely just a Glen Ring pause, as the old Mr. Glen Ring used to say. Here is the cough. It's been a wild son of a buck. We talked about it. We can still see we had the lines in here since we did the last video. And, I told you where it was going. We did the math on it. If you go back and watch the last video, we missed it by a smidge, but it was right in the hunt. Now let's check it out. Now we are 17 market days and high of 357. Right. Well, that's some money in the bank there. That's the 50. We got to that 50%. We talked about it in the last video. This was the target. Obviously, you should have been focused. Again, I'm going to do a little lesson here. I do this once in a while on other videos as well. But you always want to know where to forecast, right? Well, simple thing. This is simple. There's your pointer at the end of your gun, the red dot at the barrel of your shotgun. You line that up best you can, and you go to 50%. Gann always talked about 50% as being the the miracle, let's take it from the close because that was the highest close, 50%. So it was again right on it, right? But it pointed to it. Now we didn't know the days, and I'm not stopping here because it's on the high. It's because it hit 50%. Now, if we continue higher, the logical, oops, the next logical spot from that point, dadgummit, from that pointer, that red dot. If you're a Fibonacci guy, we got another zone right in here. And since we know that's a high now, we'll keep it lined up. But there's 60, close to 62%. The target's 386, but we've already met the time. So again, that's not, then the logic moves on, right? You just keep working. I think 75 would be my next target, 75%. And there's 75, and that's definitely in the range. There's 75 on July 17th. Now, you just keep going, right? If it trades sideways more, you go up and you run out of time, again, because this is a time and price tool. Gann always talked about 50%. Now, I'm continuing that onto the next retracement levels. 100% is logically a good area too. That double your 55 or 50%, right? And that would be, percentages up are a little better than percentages down, just because of the math. Simple deal. There's 99.9. Good enough. So we're looking at 100%. If it's one of those aggressive moves, and we're red dot at the barrel of the gun, and we already hit it. So this is the speed line as well, mathematical. But we're looking at July 29th. Now let's just do an extra little homework job. Yeah, dang it, hang on. I gotta get it so it automatically logs. There we go. There's a couple here that make sense. I'm gonna double that, and I want to see where this falls in line. All right, let's just do this one. And that's 66 market days. Of course, that's my deal. That's my matrix. Let's just change the color. And again, I know a lot of people don't trade coffee, but they should. It really technically works pretty good. At least it must be a Gann thing, right? Okay. Oh, so. Let me run it down here and let's duplicate it. So again, there was our target at 100%. And then, so again, all these are in the range. Here you can see we got multiple speeds here lining up, and we're kind of above that, right? So if this is a moving average speed, we probably break back. I think as long as we don't break this whole general philosophy, we're on a pretty good aggressive move up. And again, the fast one here was, let's switch over. Let's change colors again, just so you can see it. Let's change it to green. That's the fastest you could possibly scrape up, maybe a little fast. And you can see we're right in the hunt of that as well. And it falls on July 17th. So, 17th. So again, that's a pretty interesting. That's a shotgun theory approach, but it's mathematical. We're replicating the previous speeds, not percentage-wise, but just points-wise, and then our Gann projections based on 50% and now 100%. The double-double, so to speak. It's 34 market days. Of course, 33 is half of the matrix. So let's bring it back to half. That'll put you at about 972, we'll call it. We'll round up a bit on July 28th. So, and you can see 55, here's 66, almost 67. Let's round down on that one. Oh, that's 55, wrong one. Again, 11-day market days are the matrix. And you can see they fall in line, 33, 55, 66. This one will go to 77 just because I can. So you can see how the math lines up. And coffee is one of those that just gel. So 33, half 66. Again, half of the matrix. My old rule is if 33s should be a buy, not a high. If this is a low, so again, if it breaks back, that makes sense to me. I'd be pretty bullish. Also coffee, because again, that's just a simple rule. 33 should be a buy, not a high. If it's a high, you get out. Well, that's halfway. You should have been out, right? Let me see, how many days was it? 17. That's half of 33, right on the hunt. So it'd be nice to see it break back. Anyway, let's move on. Geez, sorry. I could talk charts all day long. Here's the cotton. Again, one of our nicer bulls with gentle, really. One by, let me see, I don't know what the speed was, but it didn't increase margins terribly. This little break back was all it had. Oh my, that's bullish. Don't be short cotton. Makes sense to me to if you're a day trader, right, buy any little dip. like this, right? You had this inside day, broke out the low, buy that. Put a stop somewhere, maybe down below the low, right? Once you know that you're comfortable buying like it did back here, you might not have known until you got up here, but every little opportunity, it took out the lows here by a smidge, maybe 10 cents or 20, 30. Those are kind of the breaks you buy and you trade. You can put a stop in and pyramid a little bit if you want. Here's a little 2-day break, but just couldn't, points wise, it was nothing. And then we set the high, broke back a smidge, right? ABC. Here was your buy again. And just every day you can buy like that little smidge break. That's all you're going to get. Again, in my opinion only, we are undervalued in cotton. We're trading undervalued in cotton. Now maybe we're not, and they're just doing it that way. But I've got a gut feeling that dormant market, that the sleeping giant, is not sleeping anymore. It's waking up, and those are good to trade, especially early off. Right, it's still cheap. It's not all time. You're not trying to trade all-time highs and scared to death. Here's the sugar, another chopper. I like that bottom. Could take out lows. I guess it wouldn't scare me too much. I'd buy a new lows. I have a hard time buying strength though, right? Like Gann would normally do. I couldn't do that yet. That's not, to me, not the market to do that. But again, you can see we've had 10, 11 days up, and a chopper that's about as much as you get without some little weird anomaly pullback. Here is the orange juice. Again, a soft trade. We talked about possibly, again, just this market making new lows on the rollover effect, right? That's the commodity issue. We're already down 75, so I can't sell it down there, but I definitely couldn't buy it. I would wait maybe for a new look. I guess to me, there's just haven't been enough time. The bull was just right here, right? 2024, a year and a half ago. It's just not enough time to be comfortable or just to power buy it. And we're down 75. If it breaks that though, then you got to do the math on the 85% level. Every bull market breaks between 65 and 85. 75 is in between. I don't really need to go down there. But again, the silver, 65 to 85 is normally where the low is going to occur, somewhere in there. Gold, same way. Just count on it. It's just a natural selection. 50%, it usually goes through that one. Sorry, Gann, I don't believe that one in this era. Or maybe hurricane season might put a whammy on them or something.